as the Monetary Policy Committee of the Bank of Ghana holds its 85th regular meeting with an announcement of a new policy rate on Monday, 26 November. Now, this would be the committee's last meeting for the year as it takes some crucial decisions on the banking sector. George Biafe looks at other issues expected to dominate discussions over the next 3 days.
The committee, which is chaired by the Governor of the Bank of Ghana, Dr. Ernest Addison, is starting their meeting from this morning after the pre-MPC meeting, which began on Monday. This actually saw the technical directors of the central bank assess the necessary data for it to be scrutinized by members of this committee from this morning. Sources say they'll be looking at coming up with some additional measures to firmly stabilize the Ghana cedi, which has witnessed some blips over the past 3 weeks, dealing with some of the banks that are said to be still facing some financial challenges, or call them the troubled banks. We can also not forget about decisions that they will take which could impact on the cost of credit in the country, with this policy rate which stands at 15%. At a recent Joy Business Forum in Accra, Second Deputy Governor of the Bank of Ghana, Elsie Awaji, said that 20 commercial banks have met the minimum capital requirement. So, with about 40 days to December 31, it could be that 13 commercial banks are racing to meet this deadline. The meeting would end on Friday with the policy rate announcement next Monday.
All right, so the Monetary Policy Committee meetings is always followed by the announcement of a new policy rate. But one would ask, what has been the trend of the rate decisions, implications, and impact over the course of the year, especially as this remains the last meeting for the year 2018? Joy Business's researcher and analyst Philip Naufuri will walk us through this. Philip.
Hello, Emmanuel. Thank you very much. Well, like you rightly said, this is the last meeting for the Monetary Policy Committee of the Bank of Ghana. Over the course of the year, they've had 5 meetings. This will be the 6th. They meet on a bi-monthly basis. So every 2 months, this Monetary Policy Committee of the Bank of Ghana meets. And it's established within the Bank of Ghana Act, or it's in law. They're supposed to meet to review the health of the economy. So over the course of the meetings this year, this is data from their website. And you can see that they've met January, the rate was at 20%. And in March, the rate was at 18%. Then we had another meeting in May, then another one in July, one in September, and then we're going to see this one that's taking place in November, finish up on Monday with the announcement of the rate. Currently, the rate stands at 17%. Now, if you look at this chart I have here, again from the Bank of Ghana's website, you realize that over the course of the year, I even took us back to last year, November, you've seen that the policy rate has trended down largely. You may ask yourself, what exactly is the essence of the Monetary Policy Committee? Now, the Bank of Ghana's primary role is maintaining price stability. That's inflation. So their job is to control the numbers, make sure that inflation doesn't spiral out of control and affect the prices at which you and I buy goods and services. So that's the primary role of the Bank of Ghana. The other parts we see is their role in the banking sector. But with the essence of the monetary policy rate, they are supposed to adjust this rate to affect lending rates in the economy, which will again control the inflation. Now, we always make the argument that we don't see lending rates coming down and it's difficult for you and I to borrow. So, Emmanuel, in April 2018, the Bank of Ghana realized that its monetary policy rate was not really affecting lending rates in the economy. So they, together with the Ghana Association of Bankers, came out with the Ghana reference rate. Now, what this means is that it's supposed to help interest rates connect with monetary policy rates. Currently, as I speak to you, the weights in this Ghana reference rate are as follows: 40% for the monetary policy rate, 20% for the interbank lending rate, and 40% for the 91-day treasury bill rate. So it means that if the monetary policy rate drops and the treasury rate drops, all things being equal, then we should see a drop in the lending rates. However, this new lending rate scheme was introduced in April 2018. So we have a backlog of old lending rates that are still in the economy, and it's going to take some time before the new rates kick in. So essentially, as we speak today, from the Bank of Ghana, you can see that lending rates have averaged about 27%, and that's as of August 2018. And you realize that the Monetary Policy Committee is very important. They review developments in the economy. They look at the external economy. How are things in the United States, for example, affecting us as we trade primarily in the US dollar? Emmanuel.
All right, so Philip, would you say that the reference rate is actually affecting or pushing down the lending rates as desired by industry?
Okay, so the reference rates from the Ghana Association of Bankers website as at November 2018, stands at 16.35%. Now, this is the rate at which banks should refer to before they start lending to you and I. So they can add their premium to this, and maybe we can see a lending rate of about 20%. However, because this was introduced in April 2018, we are just in November, it's going to see some time. My engagements with bankers in the Treasury departments and the like say that it's going to take some time for this new lending rate to kick in. You know, the old lending rate was based on the base rate model, and it was somewhat expensive. It made lending rates very high. But over the course of the year, lending rates have trended down largely, albeit marginally. But we should see that over the course of the next year, 2019, we should see some modest reduction. All things being equal, that's if the Monetary Policy Committee decides to hold the rate or bring it lower at 70% where it is now, and other factors such as the 91-day Treasury bill rate and the interbank lending rate, that's the bank rate at which the banks lend amongst themselves. If all come down, all things being equal, we should see lending rates in the economy come down.
All right, many thanks for that update. Philip Namfuri is an in-house analyst. He's been talking to us about the current sitting of the MPC and, of course, the following the announcement, of course, of the new policy rate next Monday.